So all it took was a 5% drop for people to get bearish again. After an amazing July, which was a surprise to nobody, as I told you on this channel, the last 16 Julys have been positive. The market is now down 5%. And it seems like the masses are starting to get worried again. If you look at the fear and greed index, you'll see how quick we shifted from extreme greed to now inching towards fear. But don't worry, I'm here to give you an honest take on the stock market, at least how I see it. We've been reading this right for most of 2023, minus a short stint in February when I said I was unsure. But after the market shifted from bear to bull market, I told you that if we get a pause in the rates in June and we get a resolution of the debt ceiling, that 45 to 4,600 was my target on the S&P 500, and we hit almost exactly 4,600 in July. And at the end of July, I told you that August and September were usually bearish months and we were likely going to be heading for some sort of correction, and I was expecting a 5 to 10% pullback. So where do we go from here? In this video, I will give you my take on where we're going in the stock market in the short to mid-term, and I'll update you on my plays and how I'm currently positioned based on this market. Let's get right into it. So first things first, why in July was I expecting a pullback in August? Well, I shared this on Twitter. By the way, follow me on Twitter and Instagram for free daily trading finance content. But I posted this on my Twitter and I said that when we go from bear to bull, usually we see a 5 to 10% pullback within a month. We did not see that in July, and the S&P 500 bull market started somewhere around the second week of June. Then at the end of July, I updated you guys with a video talking about a potential August pullback. And in the Academy, I was saying that August usually is a very mixed bag for both the triple Qs and the SPY, as you can see here, and September is usually the same thing. Next, I said that the stock market routinely sees a correction before hitting all-time highs. You could see this here in 2019, you could see this here in 2020, and you can see this here in 2021. And if you look at the stock market, here were all-time highs that we established at the end of 2021, beginning of 2022. And here's where we were in July. And you can see that we were 5 to 6% away from all-time highs. So it only made sense based on previous trends to see a pullback from there. Then finally, I said that I don't use EMAs for trading, but I do use them for longer term analysis. And when the 8 EMA crosses below the 21 EMA on the daily, we usually see a pullback of 6 to 8%. And you can see the EMA cross happening there when August started. So none of this comes as a surprise to me. And you might be saying to yourself, well, if you knew it all along, why don't you put your money where your mouth is? Well, look at this here. I put a post in the Academy saying that it is time to hedge and that I was going to be doing so with short call spreads. Those call spreads are now up 60%, but here's why I am starting to think that the market might turn positive again towards the end of August. It might bleed a little bit into September, but somewhere around that range between the end of August and the beginning of September, I'm expecting the pullback to end, barring obviously a black swan event. And by the way, if you want access to all of my analysis and my plays, check the link in the description. We're also doing a free mastermind talking about technical analysis, futures trading, and option selling strategies. That will be on August 27th at 12 p.m. Eastern, absolutely free. But once the waitlist spots are gone, they are gone. So make sure that you check out that link in the description below and sign up to secure your spot, and you will get the recording even if you are not able to attend. But please don't take up a spot if you don't plan to attend, unless you really want to watch the recording and you know absolutely that you cannot attend. So make sure that you click that link. It is absolutely free. So why do I think that the market might rally towards the end of August? Well, because of seasonality. When we see a rally of more than 10% from January through July in a pre-election year, I know that's a mouthful, but in a pre-election year, then we tend to see a pullback, a summer pullback start in August. And usually that summer pullback ends towards the end of August, beginning of September. Now, this is corroborated by a few things. If you look at the McClellan oscillator here, the McClellan oscillator is just a fancy indicator that is really made up of advances and declines in the stock market. I'm not going to go into how it's calculated. You can Google it if you want to. But when the McClellan oscillator hits minus 100, we tend to see an end to the pullback in the S&P 500, and the next 30 days we usually see about a 4% gain. Even more than that, when we tend to see the McClellan oscillator cross below minus 50, a majority of stock market bottoms usually occur within 15 days. Now, we have two major events coming up on the horizon as of the time of this recording. We have Nvidia earnings coming up. I believe that's August 25th. 4th. Sorry, that's August 23rd. And then we have Jackson Hole. Jackson Hole is not an FOMC meeting. It's just where a bunch of rich people gather together and they wait to hear what Jerome Powell has to say. Now, Jackson Hole will be on Friday, August 25th, and we will be live streaming it here. Remember that this is not an official FOMC meeting. Why do I say that? Well, because in an official capacity, Jerome Powell has to stick to a specific script. Now, I don't think he will deviate much from that script here, but I do think that he will be a little bit, if he wanted to say something that was a little more hawkish, because this is not an official FOMC meeting, he can really seem like he's firing off the cuff and really say something exaggerative towards his intended effect. If he wants to appear more hawkish, he can do so at Jackson Hole. If he wanted to appear more dovish, he can do so at Jackson Hole as well. But I do think that they're going to try to really put stress on the economy to push unemployment up. And one more thing that's super interesting is in a bull market, you don't really tend to see put call ratios above 1. And we have just hit 1 on the put call ratio as of last week. And usually when we get a high put call ratio, that also tends to coincide with market bottoms because investors and traders are buying puts disproportionately to calls. And at some point, they're going to over leverage on those puts and there will be a long squeeze on the stock market. Now, in terms of how I'm positioning myself, like I said, I did have short call spreads against the SPY. We had the 450, 455 short call spread. The SPY is currently trading at 436. I am likely going to leave these open for the rest of the week and collect that theta on those short call spreads. I'm also going to likely open up a bullish play on Tesla soon. Tesla is at a support resistance flip. Moreover, Tesla is also right at the 0.5 fib level of the last rally. This is usually where Tesla also bottoms out because if you look at the 0.5 fib level on the rally from January up until February, when Tesla went to 101 and then went above 218, you see that Tesla did bottom out on that retracement at the 50% of that rally. We are now at the same level here. Also, last time Tesla did drop about 28% before rallying again, and we are now at that same level here. Plus, I don't even really have to call the bottom on Tesla. I don't care. Tesla is offering you right now a 28% discount of the last bull rally, and it'll just be a matter of time before Tesla is back to teasing 300 once again. So I've already sold cash secure puts on Tesla, and I'm looking to potentially buy leaps and sell calls against those leaps. Also, the S&P 500 is about 10% down from all-time highs, so I might just dollar cost average into the S&P 500 here. I'm hoping that Apple can drop a little bit. I don't know if it will. Apple's at a major support level here. It is also, if you take a look at the volume profile, you'll see that Apple is also at a point at which a lot of investors like to buy it. So if you go all the way back to a year and a half ago, this 170 price point is a price point that Apple holders and Apple investors love to buy Apple at. So I would love to get it at 160, but you know, Apple is my biggest holding. I don't know that I will add to it here. I may open up a short put spread after this week, but who knows? I'm still undecided on that one. Anyway, if you want access to all of our plays and analysis, it is second to none. We do long-term analysis, options, futures, day trades, scalps, etc. Our analysts teach people how to pass funded accounts. We do it all in our Traveling Trader Academy. And also make sure you click the link below to sign up to the absolutely free mastermind. You definitely don't want to miss it. If you got anything out of this analysis, leave it a big fat thumbs up. Leave it in the comment section below. Let me know if you think the market is actually going to crash and go back to a bear market. I still think we'll get a recession by next year. It may be a shallow recession. I don't know yet. It really depends on how high the Fed wants to keep those rates and for how long, but I do think we will get a recession by next year. And continue to look out for more videos on how we're positioning ourselves in the stock market. Subscribe to the channel, hit that notification bell, stay safe out there, traders. Peace.